The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome here to the Diagnostic Trading Hour. I hope y'all had a great few days. Just came back from the Trading Expo. And we'll go ahead and check out right now where the market's sitting right now. We got the S&P is up 19.5 points, taking off on that positive possibility of some sort of a debt ceiling resolution. And then moving over to the Nadex, we got it up 48 points. The Dow up 149 points. With all this debt ceiling talk, be looking for these triple-digit days to be happening over and over again over the next couple weeks as they're trying to figure it out. And we're going to hop on over to the Russell. We got up 12 points. Gold up 18 points on the day right now. We got copper up over 2%, silver up over 2%, and corn up $11.50. That's almost actually a little bit over 1.5% right now. We got soybeans up 10 points on the day, 10.5 right now. And looking on over at our oil contract, oil pretty flat on the day in the middle of everything in the Middle East crisis and all the Israel-Gaza Strip fighting that's going on, only down 5 cents from previous day's close. And we got natural gas right now down nearly 1% on the day. We got euro dollar up 61 pips, pound dollar up 21, Aussie dollar up 65, U.S. yen down 15, U.S. franc down 49, and U.S. Canadian down 51. So having the dollar there showing some weakness while we're seeing all of the indices show strength as people pull their money out of the dollar and sink it into the markets. And going ahead and catching up on some of the things that have been happening throughout the world we already talked about. The debt ceiling debate sort of, front and center right now, will be front and center until there is at least a resolution or most likely some sort of kicking the can down the road. Even got Geithner saying, let's get rid of the debt ceiling debate. And he's saying, let's just eliminate the debt ceiling altogether. So, yeah, he was such a great instrumental person in the entire process. And he's one that basically, you could label as responsible for a good chunk of the housing crisis, considering he's the one that said, hey, let's go ahead and make mortgages available to everyone back in Clinton's day. And, of course, Bush didn't do much about it, and then Obama brought him back on to go ahead and keep the ball rolling. So we'll see how that one goes. But obviously, no debt ceiling is not a good idea. We've seen how that's turned out for all the other countries, and, it'll definitely make the market go up because it'll inflate the value of the dollar so much that everything will have to get more expensive. That doesn't mean it'll be worth more money. And looking on over, checking out some of the other things we got going on, we had, yesterday, New Zealand put out their PPI, never came in worse than expected. And today we had existing home sales right here in the United States and came in a little better than expected. Came in at 4.76 million, actual number 4.79 million. And the monetary policy meeting minutes are going to be coming out tonight for all you Aussie dollar traders out there. Make sure to be checking that at 7:30 tonight. And so basically, why have they kept it the same? That the Aussie has moved their interest rate here in the last couple rounds. And so you want to go ahead and definitely be checking that out. That could definitely be an Aussie dollar mover for you part-time traders or Aussie dollar traders that like to trade at night. So put that one on your record there. Looking on over, what do we got going on Tuesday? Well, Tuesday morning, Bank of Japan is going to have a whole bunch of press releases either coming out tonight or tomorrow. They're going to have their policy statements. They're going to have their overnight call rate. The time is not set. It's not expected to change, but it will definitely continue to impact the dollar, or not the dollar, but the yen, so the U.S. yen trade there. And then we go on over and we'll see the governor of the Bank of Australia there is going to be coming out and talking at 2 a.m., so that will be another Aussie dollar trade. That should impact the Aussie for you. And then the Euro group meetings going, full throttle. So, just keep your eye on those. Everything that comes out of that, they're going to be talking about, of course, Greece, Spain, France, putting the whole ESM together, just on down the list. And so as news gets released out of those meetings, then we'll find out more. And they're held in Brussels, and it's all the Eurogroup presidents. So they're all having to come together and figure out if they're going to agree on how to deal with the Greek crisis and what they're going to do about the impending Spanish debt crisis. And then let's see here. Tomorrow we got building permits. So sort of a leading indicator how many permits are being issued on buildings, new housing to get things going. And how many have started? Housing starts. That's not as high of an impact as the building permits, but they both come in at the same time at 8:30 a.m. tomorrow morning. Now, just before the holidays, Federal Chairman Bernanke is going to go ahead and come on and have a little speech at 12:15 tomorrow. And the speech is entitled The Economic Recovery and Economic Policy. And he's going to be delivering that at the Economic Club of New York. And if you ever want to find details on that, you can always hop out and over to federalreserve.gov and find that report right there. And so that's going to be the last big thing you're going to hear of on Tuesday as far as the scheduled announcements. And, of course, I'm sure we'll continue to hear stuff coming out of Washington and what they're coming up with. And then rolling on over to Wednesday, you're going to have the MPC meeting minutes coming out of Britain, and that'll come out at 4:30 a.m. So that's not just the interest rate votes, but it's also the minutes that include the latest asset purchase votes and, why and what they did. And so it'll be interesting to see what they had to say. That'll impact the pound dollar on Wednesday morning. And public sector net borrowing will also be coming out of Britain. So both of those reports should have a strong impact on the pound dollar. So if you trade around 4:30 a.m. Eastern time, then that's one you need to be paying attention to. And if you're in the trades, tighten your stops. If you want to trade with limited risk, check out Nadex. And speaking of Nadex, if you don't have a Nadex account, make sure to hop on over and go to TFNN.com today. Click on the Nadex banner. Once you've done that, go ahead and click on either Create Account and click Start, and you can go from Start to Funded in as little as 5 minutes. And then as soon as that's done, hop on over, and you also want to get a demo account, okay? So click Our Products. And by the way, it's only $100 to fund a live account, so there's no excuse. Get the live account, okay? You get all the features. You get to see real live prices and everything else. And by the way, there's no fees. There's no platform fees. There's no data fees. There's no commissions. You do have exchange fees, but in comparison, CME charges like $1.23, $1.26, whatever it is, with NFA and exchange fees. Well, over on Nadex, 90 cents. And by the way, they cap it at $9. So if you do 10 contracts, it's $9. If you do 100 contracts, it's $9. So just one of the many ways that Nadex can help you out in your trading. So again, under Our Products demo account, put in your username, first name, last name, phone number, and email address. Click Apply for Demo, and in about 5 seconds, you'll get an email from Nadex with your password. And you'll be able to go right up here and log right in and begin right away. And as you know, over on TFNN, I like to focus right here at the Diagnostic Trading Hour on how to maximize your leverage, minimize your risk, and be one step ahead of the markets. And to maximize your leverage, you want as much leverage as you can get. But you got to make sure that leverage is not a double-edged sword. So at the same time, you want to minimize your risk. And how do you minimize that risk? Well, you minimize it by trading on Nadex. You can trade the Nadex box spreads. These are not calls. They're not puts. They're not vertical spreads. You're not dealing with all the delta, gamma, theta, vega, rho, all that stuff of options. You're not dealing with margin calls and limit risk days and, everything else that can happen in futures. You're not dealing with double edge leverage. You're dealing with defined risk. And you can trade just like you're trading the futures contract. And if you're an options trader, you can hop in and check out some of the binaries as well. And it's amazing. You can go in there, and think about if you can buy a stock today for $10 and sell it in the next 45 minutes for 30. Does that sound like a good thing to you? Okay. Well, that's how binaries on Nadex can work. Now, not all binaries are created equal, but you can go in, you can say, hey, I think the S&P is going up. You can buy a binary on that for $10, okay? It goes up, say 6 points. You can now sell it for $30. You can make a 200% return in a matter of minutes on Nadex. And you don't have to hold it till expiration like a lot of the other binary, basically bucket shops is what the other ones are out there. You actually can get excellent risk reward, great returns, multiple choices, different ways to play them. And it's just a very, very cool way to trade over at Nadex. So if you'd like to trade a product that actually has the ability to make a 300% return, and even, up to a 1,900% return, but let's just say realistically a 300% return as a realistic possibility on a consistent daily basis, then check out the Nadex binaries. And same thing over on the spreads. You can go in there and you can risk $100 to make 100. You can risk 500 to make 500. You can risk 100 to make, 400. You can risk 20 to make $480 on the spreads. And the spreads work just like trading the underlying. Just think about the fact that you don't have a stop out. You have a stop loss, okay? So you can't keep getting, basically you can't get stopped out of your trade, but your loss won't grow. So the market can move against you. Your stop accumulating, okay, but your trade stays active. And so if the market goes back in your favor by expiration, then you're able to profit. And by the way, on all of these trades, you can get in and out before expiration, and you have up to 22 hours and 15 minutes. And, as little as 10 minutes, I guess, if you want to get in there right away. to place your trades. And on the binaries, you can even do weekly trades. So, today we have a seasonal cycle. And I'm talking about, whenever I'm here, right here in Diagnostic Trading, I'm talking about fundamentals. I'm talking about technicals. I'm talking about statistics. And I'm talking about seasonals. So a seasonal cycle. Well, on that seasonal cycle, okay, we got the holidays. And you know what? Today is usually a bullish week. So not today. This week is usually a bullish week, especially Wednesday and Friday. So right before the holidays there. And so you could hop in and you could buy a binary that's going to expire on Friday today. You could buy one on Wednesday. So you could have bought one this morning at 3 a.m. and caught a huge chunk of this up move. So there's a lot of possibilities. There's a lot of potential built in. And I just, definitely suggest you go over and check it out. And to get started, make sure you check out our box spread analyzer, our tutorials. If you're on TFNN, you can go over to Diagnostic Box Spread Analyzer, click on there, get a free 2-week trial, try everything out, get access to my deviation levels. And you may be wondering, what's the box spread analyzer, what's the deviation levels? Well, the box spread analyzer basically takes the best way to trade, Nadex spreads, and makes it easy. Because what it'll do is it'll filter it down where you have 40 different spreads, or not 40. Okay, so let's say there's 17 possible spreads depending upon which one you're trading, and you have 36 choices long and short. Narrow it down literally to 2 or 3 and say, hey, you know what, you're rated by the S&P, this is the spread. And it makes it very, very easy, very, very simple for you to hop in and take advantage of it. And we'll be right back after this commercial break, and I'm going to go ahead and go to the deviation levels. We'll show you exactly where they're standing at right now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, welcome on back here to the Diagnostic Trading Hour, and now we got our sound quality upgrade going on. So just getting back into the swing of things. And so like I was talking about earlier, we want to head and make sure that you got your fundamentals. You got to have those laid out. That's why we start talking off with those. Know when those are happening. And as a diagnostic trader, people come in and they go in and they're checking different things, and they don't know exactly where, what to look at. And they come up with their system, but they don't know the specific things that they should be paying attention to. So things that you need to be paying attention to are fundamental government announcements. I don't care what you're trading, okay? So people come in and they're like, well, I trade stocks. It don't matter. Yeah, it does matter, okay? So whenever the United States or Europe makes some massive announcement, it's going to affect the entire market. And so you want to make sure that you are aware of that and, be ready for that. And so you need to know when certain announcements are coming up. That's why I go through and go for them. What's going on tomorrow morning? That's important. Unemployment claims. Well, that does come up before the market opens. But you want to be aware of that number because it is going to affect the market for that day, even if the market's not open at that moment. So you're like, why is my stock going up? You're looking at stocks. Well, it may not have anything to do with your stock, okay? So, it may literally just have to do with a federal announcement that, hey, we got a bailout going on. Boom. All right, all stocks rise. So, it's not always going to have to do with your stocks. You got to make sure you broaden your view and learn to really get a macro view of the environment and not just get so caught up in the micro. And you don't want to trust the macro. Don't go, well, because this happened, then this will happen. But you want to be aware of that happening because that's an influence on order placement, okay? And that's what diagnostic trading is about. It's like, how will people place their orders based on certain things? So one of those things being fundamental news. Another example would be things like technical indicators, which most traders are looking at. And so you want to make sure that you are checking that out and you're looking at them. And, of course, most traders are pretty good at making sure they're watching their technicals and their chart patterns and things like that. The next thing you got to take it to is you got to look at seasonals and be aware of your seasonal cycles. So we're right here in the middle of the month. We had a lot of money just come in from payroll cycle paydays, okay? That money comes in and gets pulled out of people's paychecks, and then it flows right into the market, right? Because people get paid, money goes to 401k, money goes to mutual funds, then money goes directly into stocks. You get some good news on top of that, like, hey, we had some good housing starts, and maybe we're going to get a resolution on this bailout, or not the bailout, but the fiscal cliff. So all that happens together. You got fundamentals, now you got some seasonals, you got the charts pointing up, you got some technicals, and then the last thing, one of the most important things, probably one of the number one things left out of traders' toolbox that they should be using, and they should always be using, is deviations. Okay, and there's different things that some people use. All right, so to give some credit, some people are using things like standard deviations, or they're using pivot levels. Maybe they're using some average true range numbers. So, different things like that all have, their advantages. So because they help you at least get an idea on how far you think the market should be moving that day. Okay? So, that's a good thing to have. It's a good thing to take advantage of, and you want to be aware of it. But the thing is, all of those things we've talked about, standard deviations, pivot levels, and things of that sort, are behind. Okay? They're showing historical movement. They're not showing the expectation of movement today. And you really need to have expectation of today. How far does the market expect the market to move today? And that's what I have the diagnostic deviation levels for, is because they actually come in and they focus on how far the market expects for the market to actually move day. And you really shouldn't have a lot of expectations past these levels. And when these levels do get hit, you should be tightening your stops. You should use them as profit targets and as profit management tools. So they're not so much risk management tools as they're profit management tools, because you need to have some realistic expectations. People come in, and when we short, we want the thing to just crash. And when we buy, we want it to go to the moon. But you know what? That's not always going to happen, and rarely is that ever going to happen. And the name of the game in trading is survival first, and then managing your profits second, okay? And having proper expectations. And so what I do is I take the implied volatilities out of 4 different options that are surrounding the money there on each month, and I go through and I take it out of up to 4 months out. I average that into a volatility index, and then I factor that into what's called a deviation formula, okay? So instead of standard historical deviation, it becomes implied future deviation on implied volatility, expected movement. And so just looking at the S&P today, we got the S&P flying off the handle, right? So let's go ahead. Let's check this out and see where we stand just on the S&P using the deviation levels. The market so far looks like we have a high of 1380.75. Well, if we're long this morning, and we got a lot of chop as soon as it flew up here to, looks like, 1377, and that was one of our levels right there to tighten our stops. Would have been tightening our stops the entire time up, and we're literally just waiting right now to see what happens. But you'd have your stops tightened. You could go ahead and tighten them on up. You could have been out, but you would have already locked in your profit knowing, hey, that's one deviation, more than one deviation. I should be happy with that. And we'll be right back after this break. I'll talk a bit more about the stock right now.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on here to the Diagnostic Trading Hour. I am your host, Darrell Martin, and we're just checking out what's going on in the markets. And one of the things we're talking about was, you got to know your fundamentals. If you don't, you can get that perfect checkup and then bam, get hit by a bus when you walk outside the doctor's office because you don't look both ways before you cross the street. So I don't care what your system says, make sure you look both ways. See what news is coming out, okay? And, you got your technical indicators, so great to follow those, but again, always be aware of that news. And then you got to come down to realistic expectations. So even on Nadex, it'll say max loss, which is right. Okay, that's a realistic expectation. Max profit, not necessarily a realistic expectation, okay? And max loss may not even be realistic, depending on which one you're buying or selling or how you're doing it. But you don't want to have max profit in your mind. You want to have expected profit in your mind when you're placing a trade. All right? So if we go over and we're looking at that and we're trying to figure out, how to put this trade together, then we, basically want to make sure that we have the right trade at the right time. And, we want to take advantage of that trade in every way possible. But we also want to make sure we're aware, where is the market going to move? Okay, what is our realistic expectation? So if I go in and I pull up the deviation levels again for the day, and just looking at the S&P, and if I was long this morning before the the big news hit, which wouldn't have been too hard. You had some good reports coming out, everything happening, stuff coming in. So you hopped in on the trade, then you're going to want to hop in there and you want to be able to tighten your stops as it keeps moving up. And you don't want to tighten them too soon, right? Because if you tighten them too soon, you get kicked out before you get started. So that's part of how the deviation levels really help you. And there's no interpretation here, okay? It's in black and white, or gray and white and black, whatever. So the number is right there. There's no messing it up. There it is. You don't have to tilt your head sideways to see it. It's right there, and it tells you. At 1365.7, tighten your stop. At 1368.1, tighten your stop. At 1371.7, tighten your stop. So a simple method would be on 10-minute bars. Let's say you're intraday trading here. 10-minute bars. Tighten your stop on the first bar that hits that to the low of that bar. Okay? And then when it hits the next one, then tighten it again. And then when it hits the next one, then tighten again. And you may decide after it hits the 1 or 1.5 deviation that you're going to tighten every bar. So to the close of the previous bar each time, just to keep it really tight so you're locking in those profits. And even if you can't put in a stop order, you can always set an alert. Hey, if it drops below this price, I want to get out, so you can hop in there and then do a market order right when it hits below that price. So you definitely got to have a good take-profit plan. And we got Garo. Garo's back on the line. How you doing, man?
How are you, sir?
Hey, man, how's it out there in Alaska?
It's cold. It's very cold.
I bet it is. Man, I'm out here in a T-shirt in Texas, man. I don't know how you take that out there. I know it's beautiful, though. It is beautiful in Alaska, but, man.
I'm here only for 3 months. I have a business here. I have a pig farm. I grow pigs, caribou, and bison. And
wow.
I've been doing this since 1960s.
That's awesome. I actually have a cousin that actually runs a pig farm, and I have an uncle. He owns a slaughter. He has a big ranch for cattle, and we have bison all around here in Fort Worth. So I know people think that's like how it looks everywhere, but yeah. So I know what you're talking about. I grew up going to all the cattle auctions and everything else, and so it was a lot of fun.
I'll be back in California by 15th of January. So usually I'm here during the Christmas and New Year because that's the time of our business that we sell. And I import the meat to Europe, to France, Italy, or those countries.
Sweet.
So that's fine. During the Christmas and New Year, I'm here, always in Alaska. And then I'll be back in California very soon.
Oh man, I'll have to come out there and see y'all sometime out in Alaska, man. I want to see it. That'd be awesome.
Please do that whenever you want it. Just you're my guest. You're my guest. As long as you want it. Honest. Yeah.
No, I think it's beautiful out there. So I've checked it out a couple times and just see it sort of cattle raising done the Alaskan way instead of the Texas way. So there's a whole brouhaha about Texas being the biggest state, and it's like if all the hot air came out from Texas and melted all that ice off, then Texas might still be the biggest state.
Yeah. No, I cannot come to Texas. They don't like me very much there. You know what I say. But I go wherever the white man goes. I always go wherever the white man, because the other colors are not very safe.
I'm not even going there. I'm not going there. Okay, what talk you want to talk about?
On Friday, November the 9th, I'll talk to you. I asked you about Ross stores. You told me that it's going to come down to $50.42 on the January the 5th volume, which is 5 million.
Okay.
And then I'm just waiting for that number to show up. But yesterday I bought it at close.
Where are we at? We're over here back on January. Okay, yeah, because it started moving on down, and then we had a nice down move. It did move down quite a bit, so we got about a $3 drop, but then it bounced back up with the entire market on this news that came out this weekend.
Right.
Yeah.
Actually, I'm waiting at $50.42, but it just make a pivot point on day before yesterday, on November the 15th, and yesterday I bought some at close, which was $53.70.
Okay, sweet.
I'm in profit. Should I keep it for a few days or dump it? Do you think it's going to go up from here? Or
right now you're in the seasonal cycle, and so far they're doing good on their whole I don't know if you want to say. At least it looks promising that they're going to solve something on the fiscal crisis.
Right.
So. And you got seasonal cycle, you got raw stores. I mean, you're in the middle of the holiday season, okay? So as long as no negative news is coming out of raw stores, and you're in the middle of the holiday cycle, you're about to go into Black Friday sales, okay?
Right.
So, I mean, it's not a bad play. I mean, you got in at a good point on the trade, and it's not a bad buy play right now. I mean, just, obviously, keep your, I mean, if you, what price did you buy? Did you buy like around 52 or what?
No, $54.70.
$54.70. Okay, well, that's fine. It ought to be a strong bullish week. I mean, seasonal cycle. This week is a very solid week. So now you might want to take off some of those profits before the week's over, just in case we spill over and something happens next week. But really, the seasonal cycle starts this week and it goes to the end of the year. And that's the market starts rallying up. So it starts around the Thanksgiving week, and it flows all the way to the end of the year, and you get that really strong Christmas rally right there, week of Christmas up to, New Year's. But right now, everything should be going up. The only thing that's going to stop that from happening is some country in Greece blows up. Usually they keep their mouth shut during this time of year. They try to put everything off for about 4 or 5 weeks to let everything, play itself out. So we shouldn't hear anything huge out of Europe because they want the holiday sales to be big because they know they need that money in the entire economy flowing. The only thing now is as long as Congress doesn't blow up, because here, the middle of December, we're going to run out of money on the debt ceiling. And, they're trying to figure out the fiscal cliff, and they're, working on some possible resolutions. And they're trying to figure out what they're going to do on the tax hikes. I mean, to me, it's hilarious that this tax hike debate's going on. And Obama's like, we're going to raise taxes on the rich no matter what. We got to let that expire. All the money that they're going to get on what Obama's calling the rich, okay?
Right.
All of that money pays for not 8 weeks, okay? Not 8 months, not 8 days. That's 8 days of spending by the federal government. So this entire debate that they're having about taxes is about 8 days of payments per year. That's it. So it's like, get over yourself. Just everybody pass it and let's move on and then let's figure out a plan. But as long as they don't blow that up, then, Ross should have a good solid, into the, I was expecting it to move down a little bit more. It did have a final push down, and, but it, now we're in holiday rally season, so, don't fight the trend. So I'd say, you're going with the trend right now. Keep going with it. Just, make sure you're managing your profit at this point. If it starts pulling back, don't be afraid to take some off the table. And definitely at the end of the week, whether it be Wednesday or Friday, market's only going to be open for a little bit on Friday. You probably want, if you're up a good amount, at least take some off. And so that way, you're not just, there's nothing like having a winner turn into a loser. So, and so that way you're, taking some of those profits and, go buy a nice, I guess you don't have to go buy a Thanksgiving dinner, but at least you got to buy the sides. You already got the meat there. So.
Okay. Yeah. You think it's going to go up to 57?
Let's see here. The first place it would go up to based on, well, that was a down. It could easily go higher than that. It could hit 60 without a problem. That was really where it started. It hesitated right here and hesitated right here again. You have a high volume bar, and that's to the downside.
Right.
So the consensus on price would be on the low on this at 56.11. So that's the real price. That's the gravity point. And you can see that happen right here, then back down. But 56.11 is your gravity point right now. And then you could say the high of this bar, 57.03. So somewhere between 56.11 and 57.03 is basically going to be your first gravity point, because that's where the volume came together on a down and an up move. So that little 90-cent range is where you should be expecting to take off some profits. So, you have about, you may hit it today, who knows, but, possibly tomorrow. I'd say about 70 cents before I'd be taking off part of my profits. And then, go a little bit further from there.
But in general, do you think that will go down to $50.42 or?
No, I think it'll drop. I don't think it'll be next year. So.
Okay.
Because we don't. Well, at this point, last week you asked me. I think it's going down, and it was going down. But now we're in the seasonal cycle where everything flips around, and starts going back up. Once the year's over, now it's like, okay, well, holiday's over. They're gonna we'll have some nice little announcements come out. Unemployment, it got better. Well, yeah, because they just hired a bunch of people for temporary hiring, and we'll have all these positive retail sales numbers coming out and everything else. All that stuff will be all wonderful. Once that stuff's out and over with, so we're going into like late, January, February, then the reality kicks in. Okay, now we have a huge debt we got to deal with. Now we have a fiscal cliff we really have to deal with. What are we going to do about Texas? Let's say they do extend the taxes for a year or whatever. Now we got to deal with the tax problem. So now all of a sudden, all that's going to come to a forefront again. And if the economic numbers aren't showing positive by February and March, and then especially if we don't have good earnings releases in April, then it's going to be a bad year next year. So there's no more bullets to fire out of the Fed funds hose and to put out the fires. So, but right now, enjoy the rally while you can, and don't fight the trend and go with it. And I don't think this is a one-day trend. I think we'll see a little bit of a pullback probably tomorrow, just because we had such a huge run today. But I think what will happen is we have the big run today. I think we'll have a little bit of a pullback tomorrow, and it usually happens after you have any kind of big day like this. It's common. And then Wednesday, day before the holiday, things fly up. Friday, things fly up. And then, and then get ready for the week. We'll probably see a little bit of a pullback on the Monday after Thanksgiving. And then it'll start rallying back towards the rest of the year. So that's sort of my lay it out for the holiday season analysis. That's just the seasonal cycles, so how they flow.
Very good. Very good. Thank you very much, sir. Thank you for listening to me, sir. I appreciate it. Thank you.
Oh, you bet, man. All right. Stay warm.
Bye-bye.
Bye-bye. Have a good Thanksgiving. All right, so that was Garo there from Alaska, just checking things out, and always having that expectation of movement. He's looking at where should he expect it to move, and what was I looking at on that trade? Well, last week when we talked about it, I was like, hey, I think this thing's going to be moving down. It has a lot of room to move to the downside, and it was moving down. We even had some pretty strong down days over here, but then all of a sudden it started pulling back. You start seeing this fight going on, and then all of a sudden Congress comes out with, hey, everything's going to be okay. We're going to come up to some sort of resolution. When that kind of thing happens, it doesn't matter how good or bad a company is. Things just sort of, everything rises with the tide. So the tide starts rising, it starts bringing it on back up. And then as far as picking, profit target levels, if I'm doing it on a longer-term basis, I'm going to be looking at volume bars. So where did I see volume bars on the upside moves and on the downside moves? And so like right here, this was the last time we had the biggest volume bar we've had recently, really in a long time, unless you go way back here. So like right here, go look at the low of the bar. And so we see the low is 56.11 on that bar. That means that everybody at least conceded on that price. You also could take the close, 57.13. But between 56.11 and 57.13 on this bar, the low and the close of this bar, this is where everybody agreed. This is where a ton of volume took place. In other words, a lot of people bought saying, hey, I think it's worth that. And a lot of people sold saying, hey, I think it's worth that. So they agreed. Okay, that's what volume means. It means agreement on price. It doesn't mean agreement on it going lower, agreement on it going higher, but it does mean agreement on price. And that makes that act like a magnet. Okay? And notice what happened. Right after that big volume bar happened, the market just stayed around that magnet of that price. It even came down, even popped back up and hit it again, right here. So we see the price being hit again and again. So literally, I mean, it's been like almost 2 weeks. Literally 2 weeks. So right in that magnet price zone. And then it finally dropped down, and now it's pushing back up. So we should expect it to go right back at least to that magnet price again. That's where you're going to want to take some profits off. You're going to want to tighten your stops. And it's really easy to see, okay? You just got to go through, and it's what Tommy O'Brien calls real price. So, but it's where you see the high volume bar and looking at, hey, where that's where you should expect it to move back to. So when it starts making that push back, that's what you'd be looking for. So even on this day right here, if you're looking to buy, did a pull back and you're looking to do a buy on that, you'd be looking to buy right into that. And you would have got out right in time before it fell on back down. And now if you're looking to buy again, looking to buy right into that point. Now, where it's going to go from there, and this is the humility part of trading that you got to come to accept, you don't know. Okay? You know it's going to go back to that magnetic real price. Where from there? Who knows? That's why you take off some profits, tighten your stops so you're not risking anything else on your open positions. And then if it keeps riding, awesome. If not, if it falls back, then you can make your game plan from there. But no matter what, you got paid to trade. There, folks. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And we're just checking on how things are going. We definitely see a slowdown in market movement. Another way I'll check that out is I'll look at the advanced decline, or we call the net shares up and down ratio for all the stocks on the New York Stock Exchange. And by looking at that, you can sort of see the trend that's going on. And this morning you saw, boom, flying up, basically take all the ones moving up versus the ones moving down. What does that number come out to? Well, they flew up really hard, really fast right there in the morning. And then they peaked out right around 10:05 here and started leveling off. And they're starting to do a little, mini downtrend going on. And so just, with that in mind and seeing that activity happen, you might go in and go, you know what, I probably need to tighten my stops at this point. And so this would be another indicator for you to go, you know what, it looks like they're still up. They're still way up for the day. But I shouldn't be expecting the market to keep rising dramatically at any point as long as the net stocks on the New York Stock Exchange are moving downwards at this point. So, market rally, done for the day, would be the conclusion. And then you can hop over, we can look at, you can also check out your other indices, see how they're doing. Are they pulling up? Are they pulling down? And that's very helpful when you're evaluating everything. So we had the market move right up to basically almost a 1.5 deviation level on the Russell, but didn't quite hit it. So, hit that 1 deviation level solid early gate in the morning there. And then looking over at the NASDAQ up at 85.83 for the high today. And that was a big move on NASDAQ, so it did hit its 1.5, almost up to 2, but did not quite hit the 2 deviation. And then finish on over on the Dow, up at 12,734. And not quite 1.5 deviations on the Dow either. So that 1 deviation mark really would have been a great point for you to take your profits across the board. And even on gold, I know we had some good moves, move up to 1735, and that would have been right up to a 2 deviation level there for gold for you. So you could have really rode a good move in the gold market by using the deviations before it went ahead and pulled back. Now it's just oscillating back and forth a few points for the rest of the trading day. So just make sure that you do have access to those deviation levels. They're available on the S&P 500. They're available on the Dow. They're available on the NASDAQ, the Russell. They're also available over on oil and natural gas, on soybeans and corn, on gold, silver, copper, and on Aussie dollar, pound dollar, euro dollar, pound yen, euro yen, US yen, euro franc, and US Canadian. And I will be expanding them out to include over 40 different futures markets and over 3,000 stock and indices as well. That's coming here in the next few months. But right now, we got them covered on most of the Nadex markets. We don't cover the international indices currently just because getting a good source for accurate option data has been a bit of a challenge. But right now, we do cover all the other ones for the futures data. And we just got to make sure we have a lot of volume on the options data so we get accurate pricing. So that's why we cover this. But they are incredibly valuable. And they will help you so much in picking where to set your profit targets, where to tighten your stops, to help you be one step ahead of the markets. So Let's go ahead and do a quick market wrap now on see where everything is at the bottom of the hour here before we wrap it on up. And we got the S&P up 18 points. We got the NASDAQ up 46. We got the Dow up 142 and the Russell up 12. We got gold up 19 points. Copper is up still over 2% on the day. We got silver up almost 2.5%. And we got corn up 10 points. Soybean up 10 points. Oil still flat. Natural gas down 1%. And all the currencies showing the dollar stronger at the moment. I hope everybody has a great day, a safe day. I will see you tomorrow right here on the Diagnostic Trading Hour. Stay tuned. We have a great show coming up for you right after this.